there, Marianne Ace, your real estate ace, and in this video we interview 3 local loan officers. We are at Upstate Premier Mortgage, UPM, and I am sitting with Mark and Wayne.
Mark Holzhauer.
I'm Wayne Firth.
We are at GRB, Genesee Regional Bank. We've got Joe Dougherty. I am at Paragon Home Loans with Chris Madden. I've been working with these 3 for about a year or so now. They are my go-tos, they're very consistent, really a great source of information. What's really great is the first step of home buying is meeting with a realtor and also getting a pre-approval or pre-qualification. So what does that entail? What is it like to be a loan officer? What do they look for? What are some of the frequently asked questions? As well as some of the things that home buyers wish they knew at the very beginning of the process. So let's go. How long have you guys been in the industry and what got you into it?
I've been here for 17 years. I actually started working here because my brother is the owner.
I've been here for the same amount of time as Mark, and I started working here because Mark and I went to college together, and this was the place to be.
So I've been in the business about 20 years. I first got in the business, well, let me back up a little bit. I was in financial advisement. I was a financial advisor with a company called New England Financial. And I was working with selling some financial products to a couple gentlemen that were in the mortgage industry. And over the course of 6 months to a year, they kept trying to recruit me. And I really liked the idea of seeing people buy homes. Like, that seemed very rewarding compared to what I was doing before. Not that it wasn't rewarding, but it was just different. Seeing people buy their first home or save money on their existing home just seemed like something I wanted to try. So I jumped in and been doing it ever since.
So I've been doing this about 6 years. Prior to this, I was in marketing, and we were talking kind of off camera, and I had been scooping up investment properties, and kind of always liked the financing piece of it. So my wife's family actually used to own a mortgage company locally, and I kind of helped them with their marketing, and kind of did that for a while, and then kind of transitioned to get my license, and kind of took off from there. So it was kind of just more of an interest in the financing piece and working on that on my investment properties.
Do you guys have any specialties, having been in the industry for so long?
I think it's more knowledge, the different guideline changes and the way the industry's changed over the years. We've been here so long that we've kind of seen everything and kind of have an answer one way or another for just about every situation.
I think one of the things that I'm really passionate about is coaching first-time home buyers or coaching people that don't necessarily qualify now that may qualify in the future. I'm really passionate about that, helping people repair their credit or look at their budgets to actually cross that finish line in the future. My team over here, we don't really use the word decline or turn down. We call them future buyers, because if they have a desire to be a homeowner, one of the things we really want to do is provide a roadmap for that. I also do a lot of VA lending as kind of a giving back to our service members. So that's something that I think we do the largest market share here of VA loans. So I would say those are my particular 2 specialties, but I also like advising investors. So it's kind of difficult. After 20 years, you kind of have some things, and not to be unfocused, but I'm kind of nerdy about all aspects of the mortgage process.
Kind of going off my digital marketing, that's kind of where I was at, in college and then after college. I really focus on helping realtors kind of grow their business. I did set up a course, Grower Plateau Academy, where I take realtors through an entire branding, right? So how to personally brand yourself, what content to talk about, because a lot of times a lot of realtors, maybe they focus on just showing a listing, but you guys have so much knowledge that you can share with clients, and it's more just kind of focusing on how to get that content out there to kind of share and educate consumers. So I really focus on the digital marketing piece.
What documents are needed for a pre-approval?
It really depends on the situation. Certain customers come with very vanilla situation. Let's say a customer is a teacher. They get a salary, they've been there for 5 years, they're selling their house and the money for their down payment is coming from the sale. those aren't necessarily things that we have to say, we need your W-2s up front or things like that to be able to pre-approve them. We can pretty much do it off of talking to them. We will request those items, but in this type of market, you got to be ready to go. So we'd be very willing to say, okay, based on the information, here you go. But if there's any type of self-employed or commission or things like that, that's really when we're going to want to dive into pay stubs and W-2s just to verify what's there for their income.
The pre-approval process, they don't need any documentation. They will be required to get that documentation as we go through the loan. If there are areas that the bank wants to look at, for instance, they get paid differently, they're self-employed, their credit score isn't the greatest, and they want to do a full thorough review of the file. It's all income documentation, so be that W-2s or 1099s, pay stubs if they receive them, 2 years of tax returns, as well as assets, bank statements, any kind of retirement. For verifying purposes, the person is who they say they are. They always get a copy of the driver's license and the social security card.
There's the usual documentation that we need kind of getting into an initial application, which is W-2s, pay stubs, tax returns, assets, bank statements, and things of that nature. However, once we take a deeper dive into an application, we have to tailor the documentation for that person's particular financial situation. So it could be a first round of documentation just to look at, and that may be enough to make a decision for pre-qualification, but we may also need more. Divorce decree or bankruptcy paperwork, things of that nature. So there's the first group of documentation, and that could be enough to render a decision, or we may need more documentation specific to that person's financial situation.
A pre-approval, a little bit different than a pre-qual. Pre-approval, we're going to want to verify income and assets, so that'll be the tax returns, W-2s, pay stubs, last two bank statements, that kind of stuff. For our pre-qual, it doesn't go through underwriting or anything like that. All I need really is name, date of birth, social security number. I ask a few more information like employment information, that kind of thing. And usually what I do is I send people a link. They can fill it out right online whenever they're available. And then I usually hop back on the phone with them to kind of go through any questions they have, any questions I might have, and then I can issue the pre-qual letter. But yeah, the pre-approval and the pre-qual are just little different.
Really interesting that you mentioned they're two different things. So which does a home buyer need?
In this market, I would recommend the pre-approval. It's considered maybe a little bit stronger because, like I said, you have already verified your income and assets. So when it goes through underwriting, the commitment can be issued super quick versus not verifying that stuff. So you can usually shorten the commitment date time frame on a pre-approval. So I guess in this market, because it is so competitive, I would say the pre-approval.
And how long would you say it takes to get a pre-approval?
If it's the black and white, it could be within 24 hours. If it's just, hey, I work at this job and I make this much money and my credit score's fantastic, we could do it right away. If it's a full review, usually takes after they get me their documentation somewhere. It goes into a queue to be reviewed, so sometimes we get it back in a couple days. I would say the longest would be about 5 business days. Usually the process itself, the application over the phone or in person, I imagine online as well, it's about 5 minutes, maybe 10 minutes if there's additional information that we have to get from them.
What are 3 things you wish every home buyer knew?
I think it's more of one thing, and that's to be honest with us. We are not the underwriter. We're not looking to kill their loan. We're actually the screen between them and the underwriter. So no matter what the situation is, we're going to try to figure out how do we make this work? How do we properly present this to underwriting? When a customer withholds something from us, we don't know that the underwriter, in the underwriter, they're going to catch things. They're going to see things. But if we know how to properly take care of it.
Buying a house, especially in New York State, it's a marathon. It's not a race. Things do take time. Everyone's goal when you go through it is to get you closed by what's called your on or about date on the purchase contract. Sometimes we get done well before that and we just wait to that date, and there's other times where we're waiting on other parties. We are in an attorney state where there's a lot of hands involved between appraisals and title work and seller's attorneys and buyer's attorneys and banks attorneys and the underwriting and what's called TRID, which is getting out the correct disclosures. So it does take time, so you have to be a little bit patient. And as you mentioned earlier, if the bank needs something, be it an updated pay stub or a bank statement, the way that you can help things not slow down is to get us what we need in a timely manner.
We have a whole punch list of the do's and don'ts. 3 things I would say: don't deposit or do anything in your bank account that is what we call noisy, like uncharacteristic large deposits, pulling money out, moving money from one account to another. Because what a lot of people don't realize, and this is an education opportunity for a lot of buyers, is underwriters are going to need to look at the money that you're using to close, and they need to know where it came from. And a lot of people think that that's my business, or they're being credit shamed or being put too much under the microscope. But they have to realize they're borrowing a lot of money, and these are the rules that banks don't really make. These are rules that are set in motion by the federal government with mortgage regulations and things like that. So that's one thing I think people really need to realize, is that their bank statements are going to be put under a microscope. Don't make any new purchases during the process, or if you think you're going to be buying a house. A lot of people, I need a new car, and we'll often say, well, do you need a new car or do you want a new house? Let's get our value system straight. So I'd say that's the 3 things, man. Those are the big ones. And don't quit your job.
3 things I wish every home buyer would know. Get pre-qualified or pre-approved before even looking. I wish they knew kind of where their budget was, right? So have an idea about where their monthly payment is. If they're paying $900 a month in rent and they're comfortable with that number, then we can back into a payment of $900 a month. So I would say understand your budget, and that includes groceries, all the other stuff that it takes to kind of keep up a home, and also that it doesn't cost anything to get pre-qualified. That's the other thing, or to lock in your rate either.
What would you say is the difference between an attorney closing state and a title closing state, and what is that?
So a title closing state, for example, we're licensed in Florida. So when we get a purchase contract in Florida, we order the title that day. We'll have the title work in 2 days. So we're able to really facilitate moving that closing quickly. In New York State, they require what's called a commitment letter, which means that we're going to send your file in, it'll be fully underwritten and approved, and the bank has a separate letter that we have to provide to the attorneys to say you're approved. The attorneys are not willing to do any part of updating an abstract or surveys or anything like that until they receive that stuff. Once they receive that, they order those things, which can take some weeks to come in, and then they'll start the title work. So it just kind of takes a little longer. Having attorneys involved is a good thing. It's not a bad thing to be an attorney state, because you have legal eyes on this transaction to make sure everything is done correctly. Other states are more, they don't really do it the same way, but it definitely does lengthen the process. Typically in Florida, you're closing in 3 weeks, let's say, maybe less. In New York State, I always tell people 30 to 60 days, depending on the speed of all parties.
What top factors determine if someone gets a loan?
It really is very simple. There's 2 factors in getting a loan: credit score and debt to income ratio.
Credit score, income and assets, and debt to income.
You can break down approving somebody or pre-qualifying somebody into a few different things. One is obviously credit score. How well has the history of you in paying your bills going to lend an underwriter to a decision? What is your income and what is your capacity? How much do you qualify for, which is based on a calculation some people have heard of called debt to income ratio. And that's a calculation that loan officers do to see, okay, based on the debt you have, here's how much house you can buy.
What would you say is the benchmark threshold or the ideal debt to income ratio per loan?
You want to be under 45%. So there's 2 debt ratios. There's what's called the top and a bottom. The top is what is your mortgage payment versus your income, gross income. You want that to be, the perfect ratio, they say, is around 31%. And that can go up to 40. It can technically go higher in some situations. And then your bottom debt ratio is everything including the mortgage payment versus your gross income. And, the ideal is going to be below 43%. We can get them approved higher. When in taking a mortgage, it's a weighing of all factors. So a customer that has extremely good credit and maybe extremely good assets is going to be able to get approved higher debt ratios. We've gotten approved as high as 56%.
Make sure you work with a loan officer that you absolutely trust and you feel like you're getting the value that you need for your situation. Do you feel educated enough to make this huge leap into buying a house or moving or upgrading your house? It's a huge decision, and you really have to make sure that you're getting the education that you need. Some borrowers are like, nope, I trust you, that's fine, just do your thing and we'll jump through any hoop you ask. And some we need to put side-by-side analysis in front of them in black and white, and we just try and cater to everybody's needs to make sure that they're just well educated to move forward.
What if COVID affected your job situation? So what would you advise in those scenarios?
COVID is the first time in my career that the banks came up with a new guideline to make an exception for a time period. People that were affected by COVID, we just need documentation or some type of proof that they were affected. If you were laid off for a period of time, if you lost your job because of it, it's kind of they let you push away that time period, and even income calculation, we're allowed to subtract those months and not count it in your calculation of what your income is. So I don't think customers should be afraid about COVID and how it affected their employment as long as they're back to work. And also switching jobs is fine. If you're, as long as you have a job that the income can be calculated properly. If it's part-time and you just started, well, we don't know what your average income will be until you've been there for a certain period of time. But if it's a full-time position, we can absolutely use that. It's just transitioning from one job to another. They say you have to be in a similar line of work. Most jobs you can connect in some way to say they're similar in some fashion.
FHA, that requires 3.5%. In this market, a lot of times, at least the most popular for me is 5% down conventional. But in terms of paying that down payment, we can't have any shoebox money. So if you have cash laying around, in your house or whatever, that money is going to need to be put into account. However, you're going to want to do it 60 days prior to even start looking for a house because it's called seasoning. We're going to want that money to season because we need to have a paper trail. So it's really hard to track cash that comes out of a shoebox, right? So that's going to be a big thing. And then any large deposits you have, we're going to want to track. So if you have, let's say you sold a car, right? And you got money, like $5,000, we're going to want to track that. The way to track that, for example, would be to get like a bill of sale so we can tie it out. So if there's a big, large deposit you have in your accounts, we just need to make sure there's a paper trail. Otherwise, we're not going to be able to use those funds.
Customers that don't have 20% down, one of the things we always talk about is, less is more unless you have 20%. So if you have 20% down, you're not going to have PMI on your mortgage if it's a conventional loan. And so you're going to save from having the large down payment, but also from not having that monthly fee, PMI, as part of your payment.
And what's PMI?
PMI is a insurance that you're paying for the lender that protects them in case you were to foreclose. And it's a percentage, and it's based on your credit score. All right, so it could be $50 a month, let's say, or $60 a month, or something like that. It's part of your payment and protects the lender. But if you're going to put less than 20% down, it actually makes more sense to go with like 5% down versus 10% down or something like that, because each $1,000 you put down extra only saves you about $4. So another $10,000 could only save you $40. It doesn't make there's probably better ways you could use that money. So if you have the full 20, it's a huge benefit. If you don't, you're better off going with a low down payment like a 5%.
How and how often will the buyer be updated on the loan's progress?
I think it's buyer specific. Each customer has different needs. Some want, near daily updates. Some, just kind of want us to let us know when the next step's ready. We try to tailor the way we do business to that individual customer. We do run our office like a small business. We're not necessarily a small business, but we run it that way. Our motto is real people helping real people. You don't call and get a press one and things like that. You call us directly. We're always here to answer your calls and to talk to you about where your loan is or help you in any way that's going to help you with the process.
We really try and evolve the service level of what we do. And we do that through hypercommunication. So in the beginning, we have something called a milestone speech with the buyers where we kind of set the ground on when they should be communicated to. Because it's such a long process, it's a long sales process, one of the longest that somebody will ever experience. So they need to know right up front when they should expect communication. And then also we kind of fill in between. So we do something called taking our borrower's temperature, if we haven't heard from them in a while, or just a couple days have gone by. So we try and touch base with every buyer at least once a week, even if there's no news. We use technology as well as good old-fashioned phone calls and emails. So we have a smartphone app that we particularly use that gives the buyers and the realtors push notifications that show in real time when their file has been touched or something has changed in underwriting, when their interest rate is locked, and it fills them in, and it kind of keeps that communication constant throughout the process.
I always do Tuesday updates, and I always communicate however the buyer wants to be communicated. 99.9% of the time it's text, but they do get emails too, but I primarily communicate via text. If they want to call, I can certainly do that. But every Tuesday I do a Tuesday update, and then they get updates in between as well. Appraisals approved, clear to close, title's been cleared, that kind of thing. But they can expect to be updated at least from me, myself, once a week at least.
What are typical holdups in underwriting and what can buyers do?
Mark kind of touched on it earlier. It's when you're not completely honest. So a lot of times, like Mark said, pre-approval process, if it's supposed to be black and white where you make so much money, so much salary or paid hourly or W-2 to however, and you do exaggerate that, then that could be a major holdup. If you lied to any kind of federal guideline questions, if you had foreclosures in the past, or things that are child support orders or separation orders or things like that, where your financial obligations are different than what you're letting us know, those can be extreme holdups as well. The self-employment, like Mark mentioned in a previous question, we like to go through that, or the underwriters like to go through that, so the income isn't exaggerated, because a lot of people do try to say, hey, I made so much money, even though that's not exactly what they're telling the government on their tax returns.
I think that the thing that holds up underwriting the most is incomplete or illegible documents. Very simple. We get customers that their bank statements, they go and print screen from online. It doesn't even say their name on it. It doesn't have a balance. It just shows transactions.
Mm-hmm.
That's not going to satisfy with underwriting what they're looking for in that. And we also get a lot of bad copies of things that you just can't read or figure out, what's there. We're always trying to get it to underwriting quick and get that commitment letter quick to keep facilitating, but it does slow it down and often create more conditions of the loan, which slows down the process also.
I would say the most common one, we kind of mentioned it a little bit before, would be large deposits. That's going to cause a red flag and say, if we have a statement that 1 month there's no large deposits and the next month there is, we're going to need, again, that paper trail showing that. The other thing would just be not getting the documents that underwriting conditions for in a timely manner. So maybe it's saying we need an updated pay stub. Well, if weeks go by and we still don't have an updated pay stub, that's going to just keep causing the delay in the process. So staying on top of what conditions the underwriter is requesting and large deposits are probably the two most common.
What are all the closing costs? What can you expect?
So there's some certain fees that are set. There's always going to be an appraisal on the house. Someone's going to go out to the house to make sure that the house is worth what you're paying for it, as well as in good condition. There's always going to be your attorney fee. That's whoever you choose to represent you to, you're gonna pay them a fee, usually at closing. Then you're always gonna have your title fees. They have to update your title, they have to insure the title, they have to do all the proper searches. Anytime you buy a house in New York State, there's what's called a transfer tax. Whatever county that you're buying that house in, they're going to, of course, tax you on that purchase. And then a lot of the majority of the closing costs also are going to be if your house if you require or want escrow. They're always going to take enough taxes and insurance to set up your escrow account for you. On loans where you're either waiving your escrow or you're not required to have it, then that is a non-closing cost.
You know, when you're looking between lenders, for the most part, about 90% of the closing costs are going to be exactly the same. A recording fee. The county charges it. It's based on how many pages it is to record your mortgage. It's going to be within a couple dollars at any mortgage company. The title insurance comes from your attorney with an invoice. It's going to be the same everywhere. It really comes down, the difference would be, you know, an underwriting fee, if there's any points on a loan or something like that, which is directly related to the rate too. So when you're shopping, it really comes down to those extra couple fees and the interest rate, and then the customer service. So that's really what you're going to want to base your decision on.
There's no real exact answer to that, because every person that's buying could have a different type of loan product. For instance, we talked about VA, could be 0 down, USDA 0 down, FHA 3.5%. And when you talk about costs, most people are thinking, how much cash do I need at the closing table? And so there's down payment plus closing costs. Then sometimes some of those closing costs can be rolled in. Certain times of the year, there could be a grant that we're applying. There's something called a Homebuyer Dream Grant. The funds run out very quickly every year, but we have a certain time period and a certain amount of our buyers that enjoy that grant from the state of New York that we participate in. So the best answer to that is to have a detailed breakdown recommendation call with a buyer so they can get what money needs to be in a transaction for their particular situation, for their particular loan recommendation. You should lock in your loan rate is, your interest rate is something that with my team we take on personally, and sometimes we'll choose to float an interest rate even if we have a contract in the start of the process. Typically because if it doesn't look like the rates are going to vary that much, and we can look at that based on a few different market indicators, such as the 10-year treasury bill is a good indication of where mortgage interest rates will go. So we get, again, pretty nerdy about locking interest rates as best as we can for our clients by looking at the peaks and valleys on the 10-year treasury. And then from there, I'll typically lock all my buyers on the same day when there's a temporary dip or it looks safe to do so. Extending the interest rate, if you go past the lock period that we did, I mean, we kind of play it by ear. If it's the seller's delays, then we'll sometimes ask for the attorney to see if there's any room for a concession from the seller to cover that cost since the burden's on them for the delays. We can also give free extensions sometimes if it's cutting into what the buyer expected to bring to closing, or if it's the buyer saying, you know, we'd rather not close for another couple of weeks, then we just explain to them that the cost is going to be this, and it's typically 2 basis points a day or something like that, and the basis points is related directly to the loan amount. So what that per day rate is for the extension is going to vary based on the loan size, and that's something that a loan officer would, you know, educate their buyers on if they need to extend.
So your cash to close number is going to be 3 things. It's the prepaids, the down payment, and your closing costs. Closing costs, usually you can expect about 2 to 2.25% of the purchase price. That's kind of varies, but also taxes, that's in New York State going to be the biggest number just because of our property taxes up here. To set up an escrow account, usually what I do is I always quote 10 months, especially, you know, we're filming this in September, this time of year will require 10 months, but if you close at a different time of year, it might be it's 8 months, maybe it's 6 months. So depending on the time of year, that's kind of a moving target, and that can affect your cash to close number. But those are really the 3 things that you can expect to come to closing with.
What do you look for in working with realtors, especially for building a relationship and referring clients to them?
Well, for me, it really comes down to understanding that we're on the same team. There's a million problems that will come up on different loans throughout the years. And the realtors that I enjoyed working the most with were the ones that, just like me, were like, okay, what can we do? How can we fix this? Rather than be upset that something did happen or some, not a problem we caused, but I mean, a customer could quit their job. A customer could, there's just 8 million scenarios that could happen. And we are on the same team. All right, let's put our heads together. What should we do? How can we fix this? I think that's what I've enjoyed the most. But also, having almost a personal relationship. I mean, you work together so much. It's really nice to, be able to kind of shoot the breeze, and you know what I mean. So, definitely though, I think it's working for a common goal together.
Realtors that work with me help me help them, and vice versa. There are a million things that can go wrong, be it problems with the house, problems with the title work. And people that think like me. We're in an industry to help people get into their homes. Sometimes when you get a real estate agent that's just looking for that next paycheck, the human aspect is gone. And I haven't forgot that. Mark hasn't forgot that over the last 15 years. That everyone's going to have a different scenario. Be it they have to get in the house to get their kids in there. They have to get out of their current living situation because of whatever have you, family matters, or landlord wants them out. We always have to remember as a team that our common goal is to help our clients get from point A to point B. And that's who I enjoy working with, is the people that still care about their clients. They want to make sure that they're happy from beginning to end. They want them to close in a timely manner, and they're willing to help in any way, be it follow up with the seller's agent or the attorneys, or give me a document that wasn't included in the purchase contract, just so we all work together for our common goal.
Somebody that is willing to foster a team-like environment is really huge. And so there's things about the contract and negotiating. That's your hat that you wear. The mortgage hat I wear, and we kind of act in a team environment. I think sometimes a real estate agent likes to take a lot of control over the buyer, and sometimes that can make things create trust issues between the other team members, what you call. So once you have a team, a bank chosen, a buyer, a real estate agent, an attorney, I think it's very important that they all have each other's back, so to speak, and that they keep the buyer in that trust circle. Because in this day and age, with all the information that buyers have, they could feel like it's them against the bank, or it's them against, like they don't know what they don't know, so they can get defensive. And creating that trust is important to me when working with a real estate agent. Referring business, I mean, it's basically somebody I think is friendly, their heart's in the right place, is willing to ask questions from things they don't know, same as myself, and somebody I would go out and have a beer with, somebody I can be friends with, because in this business, we're going to be talking, sometimes walking away from the dinner table, sometimes Sunday morning when there's kind of an emergency and there's a one opportunity house and you have to be on call, kind of like a surgeon, and it feels good to be able to do that, but you're going to want to do it with somebody that also respects your time and becomes a friend, I think, as well as a business partner.
Kind of like clients too, like not everybody's gonna like working with me and vice versa, but communication is gonna be key. So I always look for how they kind of communicate.
What's one thing you wish you knew at the beginning of your careers?
In our industry, things change constantly. There's always new rules, there's always new guidelines. I guess if I could go back and tell myself what I know now, I guess I would probably say keep up to date on everything. With the changing market, with the changing guidelines, make sure that I'm knowledgeable to help the people that I'm working with. be it real estate agents or clients.
Run. No, I'm just. I guess I just wouldn't have anticipated all the different changes over the years. We were here in the crash of 2007. That was really scary. That was a time period where I didn't know if our company would stay open. Just because of it all. But here we are. I guess I would tell myself about how there are the ups and downs in the market and the business and things like that, and to, stay calm.
What do buyers need to bring to closing?
Usually, it's extremely simple. They bring themselves. They bring a copy of a cashier's check for whatever they need for closing, be that down payment or closing costs. They usually will bring a separate check for their attorney that's representing them, and then a copy of their ID, just to make sure that they are who they say they are, and they're the ones that are actually signing the closing package.
What are closing options if a client is out of state?
We can do it as a mail-away closing. We can hire a notary, and due to COVID, we also can do things, through Zoom and things like that. They'll mail in the package and they'll do that electronically. Yep.
Wow, it's been so long. I think I probably would have liked to have a better understanding of the time involved. Also, just how much you have to be willing to put a lot of other things before your own. That work-life balance is very hard, in this industry. You have to have it, obviously, but it's a little bit more of a juggling act than some careers. In this business, there's no real punching out and punching in. That's also the thing I love about this business. So there could be a morning where you can take off and do your work later. And as I said before, you're on call a little bit. And I think a better understanding of how much that you have to be flexible with your time probably would have been advantageous to me. And I might have kind of digested that earlier on and been able to manage it a little better.
I wish I got into and understood real estate sooner. I wish I understood house hacking. So I wish that someone had told me, hey, I can buy a house right out of college with my first job at 3.5% down. I can use seller concessions, so I can come to closing with very minimal amount of money. I can buy a 2-family house. I can have the unit upstairs or downstairs pay for my mortgage. I can live there for a year, and then I can go on and buy my next house and then start building my portfolio. That's probably the top thing I wish someone had told me when I was like 23, 24.
Thanks for watching. I hope you enjoyed this interview with 3 local loan officers. Feel free to comment below any questions you might have, and if you haven't already, like and subscribe. I look forward to seeing you in the next video.